Kągi, sveiki mielieji, kurie klausotės mūsų. Hi everyone. I bet you guessing why I started to speak not English one language today, and today you'll find out a bit later about this. But actually, we welcome you again in our Moneylogy show, as always, the same day, the same time, together with my friend Vala Arameas of Hi Vala.
Hi, good to see you.
And this show is about financial literacy, about the steps which can help you to go towards financial freedom faster, easier, because we share our own experience, our own thoughts about how we make it, and we hope that this will be useful for you as well. In each show, we share with you our thoughts about a specific topic, and the reason why I started the show today in different language is because the money is also some sort of a language, and we need to understand the words in the money world as well. And that's why today we would like to talk about financial vocabulary or the language of money. Because if you don't understand the words which has been spoken for you, basically, I can hear myself or something. So basically, it will be much harder for you to make financial decisions, which will be useful for you as well. So Vala, what are your thoughts about money language? Why it is so important? The same important probably as to understand Lithuanian, which I was been speaking recently, or Estonian, or any other languages. So what are your thoughts about it?
Yeah, I think it starts with understanding the definition of the word. And you can you have young kids and I have young kids, and once they start to learn, the first to learn is a word, and then they learn what is the meaning of the word, and then you start to put the words together to make a sentence. I think it's the same in financial world, because there's a lot of misunderstanding going around when you have a different definition of one word.
Exactly.
And I think both of us, we have seen it over the years. How big of a difference can it make?
Yeah, I totally agree on it. And basically, it's the same when you go to a foreign country and you don't understand the words from the language which is spoken there. And it's really hard for you to communicate with the people, to say something to them, and at the same time to understand what is said to you. So the same is in finances. Let's say if you go to talk with a financial advisor or financial consultant in the bank or anywhere, and they say you some words which you don't understand, but because they have, like, in a way, some kind of credibility with you, you will think that they know what we are saying because they are experts in this field, just because they say some words which are quite complex for you and you don't know the meaning of the words. But actually, if you understand the meaning, then it's much easier for you to communicate with them on pretty much equal level and make the decisions on your own, instead of just hoping that advice which is given to you by somebody else is good for you.
Yeah, and I mean, it's one of the maybe most common words which is misinterpreted is investment, for example. So I hear, like, every week people saying that I invested to fix my home. So if you call this call it as an investment, you're kind of fooling yourself, because actually it's an expense, but you call it as an investment. So it makes you feel better, but it drives you to a totally different direction when you should go.
And this actually comes also from the banks, because banks usually say that home is good investment for you, but actually it's good investment for them, because they are the ones who get the money from the loans, for example, when you borrow the money from the bank to buy the house. So who are the ones who get the interest on the loan? It's bank, it's not you. So for them, it's good investment, but for you, it's quite a high liability. So what are other words which are also important for people to understand if you want to get better financial intelligence and financial literacy?
Yeah, I would say that the most maybe common words, what everybody needs to understand, for example, is asset and liability. I'm not sure if you covered in this show already, but basically, assets put money in your pocket, and liabilities take money from your pocket. I mean, it's really easy explanation. And like you said, if the bank gets the interest, then the bank has an asset. And if it goes from your pocket, then it means that it is a liability for you. So just understanding this simple thing can make a whole difference in your understanding, what you should acquire and what you should avoid. And I would say the second, maybe the biggest one for me, was good debt and bad debt, which means that good debt is something that somebody else is paying, and bad debt is something that you pay. So if you understand that, debt as a thing is not a bad or good, it's just a question how the cash flow is working. And if you are paying for it, then this is something maybe you should get rid of. And if somebody else is paying, then you should actually acquire this more. Again, it gives a totally different focus on the debt. So these are maybe the two best examples to give for the beginning.
Yeah, thank you. By the way, those who watch our show, you can write the comments below the video, and here you can ask questions, which we will be able to answer at the end of the show, or also suggest us the topics which we will include to our upcoming shows in the future. So just feel free, write down the comments below the video, and we will discuss it in the end of the show. Additionally to those terms which was mentioned by Val, I would add two more, which is probably also very important to get the understanding between the difference. It's capital gains and cash flow, because usually people are aiming for the capital gains. They buy something low and willing to sell something high, or they expect that something will increase in price. Let's say stocks, for example. They buy stocks and they think that I will sell, then the price of the stocks will be higher, or real estate the same. And the other way is invest with a goal to get steady cash flow each month, maybe each day, or at least each quarter from the investment you have. So these words are also pretty much important if you want to control the risk, which is always appears in the investment world. So these three, I would say, this is the main probably important ones in the basics. And if you don't understand the differences, just learn, study these topics more deeper in order to really get the meaning of the words, because it's really easy to mix these words opposite, like we mentioned with the bank, for example, and the house. And usually you hear this words in totally different perspective, and this basically programs your mind to perceive these words not in the right meaning, and then basically you will do actions and decisions which are useful not for you but for those who force you to think about these words in different way.
Yeah, and you can imagine also in the real world, if if you're calling somebody with the wrong name, then it goes a big upset. But we are doing it in a financial world, almost a daily basis. We're calling our liabilities as an assets, so it gives us total wrong understanding of how we should guide our financial statement.
Yeah, so once more, basically it's quite easy to understand, but what Vala said also, assets and liabilities. Assets puts money in your pocket, and liabilities takes money from the pocket. It's worth repeating several times in order to really put it to our mind quite strongly. And I was started talking about this with my daughter, let's say, when she was 6 or 7 years old. And I remember when by that age, she already was saying me, assets puts money to my pocket, and liabilities takes money from my pocket. So if you understand it in a way like children can understand it, then basically it will stuck to your mind strongly, and you will make your decision based on that.
Yeah, and I think this example that you also gave, this capital gains versus cash flow, it's basically everybody's calling a name as an investment. So now you can understand it. So there are actually three things they can think. They can think about expense or liability as an investment.
Yep.
They can think of capital gains deal as an investment, or they can think cash flow deal as an investment. So, okay, what is it? And if you start to understand the definition of each word, then you will understand much better, and you know what you're doing. So I think this investment is a really like a general word that is really misused in different places because there's no understanding of different types of investments.
Exactly. And that's why in our show we also have one part of the show which is called Starfish vocabulary, where we give you some terms and definitions of the terms in order for you to understand better the world of investment and finance. And today in this vocabulary part, we would like to present you also one word, which is investment unit. And what does it mean, investment unit? Actually, it's a security of a mutual fund or stock of a mutual fund, which proves that you as a holder of this stock have right to a part of the assets managed by the mutual fund. So basically how mutual funds are working, they take money from the investors, pools it to the general account, and then basically invest this money to stocks, bonds or other investments. And if you own the stock from the mutual fund, it means that you are part owner of basically the general investment. So if you will find somewhere the term investment unit, you will already know what does it mean. And this is actually also one of the terms. And there are actually much more terms in the investment world and the business world. And in this part of the show, we will be continuing presenting these terms to you to help you to understand them better. And actually, if you come back to the beginning of the show, this is also just one more word from the money language.
Yeah, and maybe to add a thought here is that it's so funny because even if we speak the same language, let's say you speak let's say Lithuanian, and you have another guy who's speaking Lithuanian, you might speak totally different language of money.
Exactly.
And we have a different native language, but we speak exactly the same language of money because we have the same understanding of the words. So it's really interesting how it crosses the borders when you learn the language of money.
Actually, yeah, it's like there was several attempts probably for creating like a global language for everyone in the world, like Esperanto, some other attempts to do so. But actually, there is already the language which is common for everyone, and it's a language of money. And these terms, maybe they can be named differently in different local languages, like, for example, asset in Estonia and Lithuania and English speaking countries will be named differently, but the meaning of the word are totally the same. So if you get the understanding of the meaning, then basically you can speak the same language of money in any part of the world. And this is probably the first step, or one of the first steps everyone needs to do if you want to be more successful in the investment, in the business, and especially on the road towards financial freedom. Because on this road, you will meet a lot of different consultants, and quite often they can be fake consultants or even maybe not like appropriate consultants for you. And if you won't be able to understand what they will say to you, then it will be much harder for you to reach your financial freedom. So learn the language of money, understand the definitions, and know a lot of words from financial vocabulary, and this will definitely help you on your journey. So if you have any questions, feel free to ask them in the comment sections. We will be more than happy to answer them here. And if you want to look to our previous shows, you can always find them in any of our channels. So Facebook, YouTube, Instagram, just follow us there, and you can watch previous shows. And also you can find there additional content which can be helpful for you on your journey, also related to the world of money, to the topics such as investing, business, entrepreneurship. So just follow us there, comment, like, share, and show us your emotions about the topics we are talking here. And we hope that it will be more and more valuable on your journey, especially if you suggest us what will be the topics in the future which could be more valuable for you. So just comment below the video, and we will be analyzing it and include it in the upcoming shows also as well. And by the way, if you comment, you can also participate in some of our lotteries, which will allow you to win some prizes, which we'll be also announcing in the future. So just be active, watch the show, share the show, and comment your questions or suggestions in the comment section, and maybe you will be those who will win some prizes. So Valo, do you have any other thoughts about money?
Yeah, I would say maybe the last thought is that I think that the good thing is that the language of money is actually not so complex as we think. Just think of the definitions we gave you today. I mean, if you look for the financial dictionary, this definition can drive you crazy. But if you give it like a really simple definition and you understand the core of the definition, then it makes your life so much easier because you will start to go in the right direction instead of like going all over the place. So that's the positive. The positive message is that it's actually not so hard to learn, and usually I remember when I was younger, I was thinking, okay, I definitely need some financial advisors because it's so complex. Then the reality is that everybody can learn it, and it will totally change your financial future.
Yeah, I totally agree, Nachik. Actually, really, I even didn't realize that the complexity of money language is much lower than complexity, let's say, of some Chinese language or Lithuanian maybe or Estonian language, because
Yeah.
you don't need to learn so much grammar. You just need to learn the definitions, and then you need to dig deeper already with some strategies how to use it. But it's much easier for everyone in the world. And by the way, actually, when you reach this level, exactly like you said, you don't need kind of interpreters or translators, which are usually used if, let's say, two people are talking different languages, because you need somebody to help you to translate from one language to another. But if you understand the money language, you don't need this. You can do your decisions on your own.
Exactly.
Okay, so thank you, Vava, for sharing your thoughts. Thank you those who watched our show. I believe, yeah, we have actually the first question, so we will be more than happy to answer them. Andrus Batsevich has asked the question: how dangerous is to keep the cash flow, cash now when government print the money faster than toilet paper? So really good questions. Question according our today's situation. So, what are your thoughts about it, Vala?
Yeah, well, as you know that they're gonna print the money, which means that if you increase the supply of the currency, then the value of the currency goes down. So what we should do as investors is to convert this paper, so-called, to a real asset. And the faster we can do that, the more we can keep the original value, which was in the euro or dollar. So definitely, if you just keep the printed money as a cash in your bank account, it will definitely lose the value over the time. But now, if you're smart enough, then you start to think, okay, what are the different asset classes I can, turn into the cash, so I can at least keep the value of it. So that's already the part of the financial education.
Exactly, yeah, I totally agree with it. And basically, what does it mean that just keeping the money away or saving the money is not enough anymore? And quite a long time already ago, this event happened, because this is when your money starts losing the value. And basically, Andrews, what you already also said, that the governments print money faster than the toilet paper. So it means that this paper which we use can be quite fast in the future, worth the same as a toilet paper. And the question is what you need to do, or you do already now, in order to avoid this situation. And it's definitely the only solution is just to forcing this paper, which is still worth something, to work for you in the different form, in different assets, so like real estate, commodities, stocks, or other instruments. But the most important thing in the beginning, I would also say, coming back also to today's topic, is understand the definitions in these types of investment instruments, because there are a lot of different terms in each of them. For example, in real estate, you will probably meet such terms as cap rate, or let's say amortization, and so on. In paper assets, you will meet a lot of different financial indicators you will need to understand. Let's say when you analyze financial statements of a companies to which you would like to invest in. And these are also the parts of this money language you need to understand. And then when you start understanding this word, you can basically start investing to the asset classes which you like the most. That's why the most important step before you do that, in my opinion, is to get really clarity about the investment types or asset classes which are most useful and most suitable for you, because each of us are different. From the personality type, from the character type, from the tolerance of the risk which we can accept, and that's why we need to choose not the only one and the same asset class to invest in, but this combination, or at least one asset class which is the most suitable for us.
Yeah, that's why the prices are going up in different asset classes, because actually the value of the euro or dollar is going down. So that's one way how you can keep it. And if you think only last year, 2020, the central banks in the world printed 19 trillion. So in the past we were measuring it in billions. Now we're measuring in trillions, and it's 1,000 times more than a billion. So it's pretty crazy money printing going on, but that's the way how you can do it. But if the price is going up, then it doesn't mean that maybe asset appreciates, but it means actually that the value of the currencies going down so fast.
Exactly. And I would say that we even don't experience yet this real depreciation of the value of money, because still it's not reflected in the real prices yet, but it can happen quite soon. That's why we need to do something with the money, and definitely not just hold them in the bank accounts. So thank you for your question, Andres. Oh, all of us, if you watch our show, you can also write the question the same like Andres did, and basically participate in our show more actively. And also not only send your questions, but as I already mentioned, suggest the topics you would like us to discuss in upcoming show, which would be valuable or interesting for you, and we will definitely include them there. Andres, thank you for your question, and because currently at least you are the first one who wrote the question, we give you a gift. This is a Starfish cup, which you can basically take from our office, or we will send you if you are not in our country. Just contact with us, writing the message to Starfish Academy Facebook page, writing the address where you are located, and we will be more than happy to give you this as a gift and to send it to your place. So thank you for your question. Participate in our show in the future. Also the same level of activity as now, and probably you or somebody else who will do the same also will win some other prizes from us. So one more time, thank you for those who watch our show. Thank you, Vala, for your time and your thoughts about the topic. And we will meet when? The same day, the same time, just the next week, and we will have another discussion, another topic, and of course we will be looking forward to get questions and suggestions from you in the show also as well. Have a good time. Have a good day.
Have a great week.
Bye-bye.